Hi, I'm Justin Kelly, President and CEO of CPF Mortgage, and today I'm here with Nick France, one of our senior loan officers, discussing the state of the market right now. Get a ton of questions about this from borrowers and people in general. You know, we hear rates are up, market's going crazy, nobody knows what to make of it. What are you hearing a lot of right now, man?
Yeah, absolutely. So, that's the big thing that people are kind of worried about right now. Look at where rates were at the beginning of the year to now. They're way up. They're way up. And yeah, I mean, you compare it to historic lows. Sure, they're up from there. That's what a historic low is all about. But we're bouncing just off of that. And I think people forget how much of a long-term play it is. The power to have that payment locked in for 30 years. Good Lord, you go back 10, 20, let alone 30 years ago, what rent used to be. And then you look at where rent's going 10, 20, 30 years from now, it's almost worth it to say, okay, I'll take that rate. Just lock me in, stop the bleeding. People are getting priced out when it comes to rent, which is your alternative.
That's a great point, man. I think a lot of people end up getting hung up on, a number like, oh, I can't buy a home because rates are at this level. Or I'm paying this for a home. Really what I feel like people need to do is, find a comfortable level and payment and make sure that you can qualify and afford that payment, because this is a home. This is a place you're going to live in. This is a place you're going to be at for years to come. And it's a long game. It's an investment, but it's also the place where you're going to raise your family and you're going to live.
Yeah.
So I think people kind of miscue that sometimes.
Yeah, and you bring up a good point there because, it's about you. What makes sense for you? People get caught up in the noise of, everyone's talking about this or that. That's not under your control. Focus on your economy, your home, your household. You're buying a home, you mentioned, right? You've grown up a family here or whatever it may be. And you got to think about you and your scenario. I know many people that they make a quote unquote bad deal in a quote unquote good or bad market. It's not so much the market that you're going into, it's about how you're approaching that deal. In any market that you're in, you can make a bad or good deal. It's about how you look at it, how your own personal household is set up.
Yeah, I
overlook that too.
I can definitely appreciate that. I mean, everybody is at a different economic level, what you can afford, the area you want to be in, what is going to meet your family's requirements and needs. And I think at the bottom line is if you need a home and, you need to raise your family somewhere and you want to pick a certain area, you should be looking at that as a primary residence purchase. Like, where am I going to settle down? Where am I going to raise my family? And then, you take a look at what are your economic conditions, what's your financial condition, and then, you base everything off of that. You make sure that you can afford the payment that you're taking on right then and there.
Bingo.
And you lock it in, you make sure it's a fixed rate, a payment that's not going to move on you, and that way you have a certain level of comfort. I think a lot of people also forget about the fact that markets move up and down, right?
Sure
so
do.
now, rates are high, but what could happen in a few years? I mean, maybe we talk about options.
This is the beauty of it that a lot of people don't think about, or they don't look behind the curtain long enough to realize, you buy you buy a home today and you get a rate that's quote unquote high compared to what the future has to offer. Hey, we do loans anywhere from 30 years and every number in between as low as 8 years. So you're 6 years into that loan and rates go down. You don't need to restart the clock 6 years back. You can pick right up where you left, take advantage of the new rates that the market has to offer, and you get the best of both worlds. You bought that home way back when, and now you get to just simply drop your payment, drop your rate. And guess what? Rates don't go down. You made the right decision. You bought before they did continue to rise. So it's really a best of both worlds scenario that people get confused. They get caught up in the noise and it's good or time, bad time. That depends on your own scenario. It doesn't depend on what your neighbor's doing or your family, your friend.
Yeah.
That's a personal.
Fantastic point, man.
Fantastic
point. You take a 30-year loan out now and your rate, let's just pick an arbitrary number, is at 6%.
Sure.
And 4 years go by, you pay down on your loan, and all of a sudden rates go down to 4. Now you have an opportunity to refinance, and you're right. People get hung up and they think, I have to start the clock back over to 30-year loan.
Hear it all the time.
Yeah, not the case, right? Not the case at CPF Mortgage anyways. We've got, that flex term where we can, pick any term between 8 and 30 years. So somebody's 4 years into their loan, on a 30-year, we can go 24 years or 26 years.
That's right.
And, you know, we can
bring you right back on track.
Yeah, we can put them right back on track, lower their interest rate, and, you know, keep them on the same payment track. That's great. What about also, like, you know, a lot of times I've seen people where, yeah, they go into a 30-year, they take a higher interest rate, rates drop, but also their income might have increased, their situation might have increased, you know, their family cash flow, and now it makes sense to maybe even not only lower the rate but reduce the term. You know what I mean? Go from a 30-year, and they've paid maybe 5 years on it. They got 25 years left. Now it makes sense. Rates drop. Maybe they look at a 15-year loan. You know what I mean?
Yeah.
Have you seen that happen?
You get
quite often?
super creative with it. You can take a look at those loans. Maybe you do that where you say, okay, I'm a couple years in. I want to go ahead and reduce my rate, reduce my payment. But you've been living good. Don't change anything for you. Maybe make that same payment. And I've seen some people save $100, $200 a month. Not gonna break their bank. They're good. They got the extra $200 a month anyway.
Yeah.
No problem. Put it right back in. Make it a principal pay down payment now.
Yeah.
And you go do a quick mortgage calculator. You know, you're gonna find out you save years and thousands by paying that thing down sooner. When you know nothing changed to you. You're making the same payment, but we can drop that portion where it goes to interest, and you're
Makes perfect sense, right?
Yeah,
Makes perfect sense.
Service.
When you stop making mortgage payments, you're not paying interest anymore. So the sooner you get that thing paid off, the more money you save, for sure. You know, that's also a great point as well. So, I mean, getting back to this market, we've seen interest rates increase. It looks as though right now we're battling inflationary problems. You know, these are things that aren't going to go away anytime soon. We're trying to get it under control. So, you know, people who might be thinking about or on the fence, you know, hey, listen, I might wait to see what happens and, you know, rates drop. I mean, what would your advice be for somebody like that right now?
Yeah, I mean, I keep it simple. Motto I live by: don't wait to buy real estate. Buy real estate and then wait. Okay, it's cyclical, and the time to get in or out is dependent on your scenario, not what everyone else is doing. I would go back to that. You know, it might not be the right time for you. It might be the right time for you.
Yeah.
Best way is to really take a macro look and a micro look at your own scenario and determine that the right way. Yeah. Only right way to do it. That's the only way to go about it in any market.
Fantastic. I like that. Don't wait to buy real estate. Buy and then wait. Because,
you got it.
You know, if you look at a graph, you know, a 30, 40 year over, you know, real estate values, there may be, you know, some times where you've got dips, but if you look at it, it's always going upward. You know, you rarely see it, you know, just continue on a downward cycle and never come back up. So that's a great point.
Yeah.
And for people looking for their primary residence where they're going to be living, again, raising their family,
yes,
you need a place to do that anyway.
Yeah,
so
absolutely.
You might as well make an investment and stop paying your landlord.
I was going to say, if rent was free and the government covered the expense for you, might have a different argument to make there, but I don't think you want an environment like that. And number two, rent's not free. It's a real expense that people don't equate when they're thinking time to buy or not.
Sure. Yeah, that's another good point, man.
Yeah.
I mean, listen, rent is, the interest rate on rent is 100%, as they say.
Yeah.
So at least if you've got yourself a home, you're building equity in it, you're making payments on it, you're paying down the balance of that loan, creating some value for yourself. So these are all good tips and tricks. I hope you guys enjoyed this little segment here. You can hit the like and subscribe button below. Give us some comments. Let us know what you think. We'll interact with you. You can certainly hit us up online at cpfloans.com, or you can call us at 727-955-2316. Thanks, and we'll see you next time.